All right, welcome to week 2 of my live day trading account recap. This video is already pretty long. I'm halfway through editing it. It's actually 10 o'clock at night on a Sunday, and I still haven't got it rendered and uploaded. So I'm going to make the intro quick, and we'll get right to the trading. The week started out good, and then Thursday and Friday, everything went to hell, and I blew up a lot of money. Haven't blown up the account, but I'm down over 50% as of the end of week 2. So week 3 is going to be a very testing week for me. I made quite a few mistakes. I'm repeating the same mistakes over and over and over. All right, so we'll go over my stats real quick over the week. Monday I was green. Tuesday, small loss, but it was still a manageable loss. I think that was 1 or 2 trades, so an $18 loss between the two wasn't bad. And then a good green day, and then Thursday, well, you'll see it, but bad trading. And then Friday, I just really way over traded and made a ton of mistakes and should not have been trading the way I did, and it burned me very badly because of it. And this is my win to loss for the day. So I had all winners Monday, a loser, and then all winners Wednesday, and one or 2 winners and more losers though, and then all losers Friday. All right, so here's all my trades for the week, starting with HTZ down here up to NZATX. It started green again, but then the last 2 days all red, and I'm now down to $210 or $250 in the account. I was up to almost break even on the 500 after last week's losses, but then Thursday and Friday just everything went to hell, and I didn't manage myself correctly, and I way over traded, and I also missed some key important trades. I was trading against the trends and doing all the same mistakes that I had from last week. I need to figure out how to manage them and quit repeating the mistakes. I either need to change my strategies or just set more discipline in how I trade and set predefined rules, because it's costing me money. Oh, and real quick, if you haven't seen it yet, I actually did a live stream Saturday with my friend Ryan Hale. He is actually a profitable day trader and has helped me out a lot and teach me a lot of things. So if you haven't seen that, go ahead and check it out. He basically talks through a bunch of different tickers and explains his thought processes and stuff and how he trades. It's a pretty good video. But let's get to the trades now. All right, Monday recap. I'm shooting each one of these recaps as during the day that it happened, so I'm a little more concise and I can explain what I did a little bit better. So first off, I only made 2 trades today. Well, I made a few trades, but they were only 2 tickers. The first one was HTZ. I was still swing trading this on my Robinhood account. It's still looking bullish, and I'm good on that. But I decided, there was no low cap stocks moving today. There was no big runners. There was nothing looking like a really high probability trade. So I decided to do something a little different and channel trade HTZ today for a day trade. And I had already been watching it for the past couple days on swing trading. I knew that it was making this solid trend channel, and I knew it was going to come back down here, especially on this pre-market run-up. So as it confirmed a bounce and higher lows, I decided to size into it right here on the break, and I ended up taking half profits at the half channel and then at the 75 channel. Might be a bit easier to see here. So we had this run up and a bounce and a solid trend. My sizing, my full entry was here at the green line for, I think, HTZ 120 shares. Yeah, so let's see if I can pull this up a little bit so you guys can see my sizing positions. I don't know if you can see, you can't see HTZ. Well, you can see the sell. And also I can't pull up my, the downside of this is I cannot pull up TradeSync's logs because I can't export my trades out of Tradenet until tomorrow. So unfortunately I can't pull the stats into TradeSync and show it to you today. But we'll do, in the recap I'll do everything at once. So my entry was here, my stop loss was down here. I used my calculator to figure this in. I started the day at $410. I was risking 12%. So I sized into this for 120 shares. 120 shares was a 25-cent stop loss, 13.55. So my stop loss was like right here on this day trade. So if it broke down and went down a low end of the channel, if it broke this trend, I was going to get out of it and wait for it to bounce and then re-enter it down here. So my loss would have been not the full stop loss. It would have only been a few. I was risking 12%, so, or no, I was risking 10%, so this would probably be like a 2-3% loss. But it didn't do that. It confirmed the trend and went up. So my first sell target was the previous high of day, I believe. No, it was right down here. As soon as it broke trend on the 50, I took profits, or half profits, and then I took the remainder at 14.15. Really straightforward trade, just channel, play the bounce, let it go long. Made decent. I made, what did I make on HTZ? $31. So at trading $410, or sorry, $31 divided by 410. There's about a 7.5% portfolio gain on this trade, so pretty straightforward, nothing real special to it. The next trade I made was RETA. I saw that this stock was running up huge on huge biotech news. They came out with good phase 2 report, and this thing moved a total of $27.75. So this thing was a huge run up. I didn't chase it. I didn't try to get into it long. I was actually trying to short this, and the strategy that I was using is it's called basically shorting a bull trap. So bull traps are a strategy for trend trading. The way it works is once a price defines a trend, typically it stays in that trend and it does not exceed that rate of a climb, especially on an intraday channel. So the way you play bull traps is you look for the stock to spike above the channel. So price action going above the channel is basically indicating that the stock is overextending itself on its rate of ascension, and you can typically short these pretty heavily, and they can be a very high probability trade if you do them correctly. I kind of screwed them up today, but I still turned a profit on it regardless with some proper trade management. We'll scroll back here on my first trade. So I entered here at the green, and this is the trend channel, if you can see it pretty well. So it was at the high end, but it wasn't a technical bull trap. I was impatient and I wanted to get in at like the 90 of the channel. So this is the full channel, and this channel is like $1 or $4.50 range. Yeah, this right here is a $5 channel almost. So this was a huge range, and the stock had like a 40 to 50 cent spread, bid and ask. So the only way I could get into this was limit orders. This was not a market order type of pattern to trade. So I set a limit order here, and I screwed it up and thought that it was going to short down, and I got kind of scared when it was ripping up here. And also my trend channel was not drawn entirely correctly, so it was a little more nerve-wracking during this movement, and I sized in a little too heavy. I did 50 shares short instead of a lower number. So my stop loss on my calculator, 50 shares was about 65 cents. So my average entry was 67.39, so right up here. It almost touched the stop loss, and I would have been down 10%. Total of down -3% for the day because I had the 3% on HTZ. But I knew it was going to pull back, and I knew it was just the first run up. And it ended up pulling back, but at this point, I realized that I did not have a good entry, and I didn't want to wait to see if it curled back up and bounced off of the 50 channel. So if we throw up the channel lines, so I shorted it probably at the 90 of the channel, and it ended up coming back down and touching the 50. But at this point, I was a little impatient and nervous, and I knew I was way too overexposed. I knew the stop loss was too high, and I just wanted to get out of it and downsize my risk because I was already green for the day. I wanted to play it a little safe, and the proper entry would have been here at the high end of the channel. So it came back down, and then it started to create a new channel. Actually, it started to bounce and create a triple bottom, and I was waiting for it to see if it would break down and short to the VWAP, which would have been like a $5 or a 5-point move. It didn't do that though. It kept climbing, and at this point, I didn't want to play it long because that's chasing. It's bad to try to get into a stock like that because it could flip at any moment. And I just waited for the next bull trap, and I wanted to see it run up. I didn't get into it here because I felt that it was I wanted to get higher. And then I got impatient again, and I did get into it at the 50, but I only got into it at 18 shares instead of 50 shares, so it was much looser stop loss. 18 shares on my cheat sheet was $1.75, so almost over double the stop loss, so much looser, a lot less potential for losing profits. And it's touched, and I got in on a bad entry again. I should have set my stop or my entries here above the channel for a bull trap. Would have been a much greater stop loss, and I could have sized into it heavier for better profit, but getting impatient again a little bit, and it curled back up and actually did a double top before it came back down. And at this point, I didn't know if it was going to continue to curl back up and bounce off the 50 or come all the way back down, but I had a bad entry, and I just wanted to get out of the position and break even to reduce. I just wanted to get out of the exposure of my portfolio. I did not want to lose money. Making money is great, but not losing money is better. So it ended up coming down, and we got a double bottom here, and then it started to channel up, and it failed on the 50, and it curled back up, and actually this channel. So when I drew this next channel, I drew it here. No, I drew it here. And at this point, I was waiting to see what was going to happen. At this point, it looked like it was breaking channel, but it could have pulled back into the channel and continued to run. Typically, I like to see a channel trade like this channel up and then change channel ascension. So this is a rate of change basically. The way I look at channels is if you've ever studied Tom DeMark, he's got some really fantastic videos on YouTube. He's an old school price action and trend trader, and he sequences price action and stuff. It's very interesting how he trades, but he basically looks at the channel as a rate of ascension over a set time. So this spike is 12:09, so this is 12 o'clock, this is 1 o'clock. We go here to here. This channel was basically moving at a rate of $5 per hour. So this was a huge runner for the day. $5 per hour rate of ascension. And I like to see them break their rate of ascension and start to flatline and then make their last little push up, and then I short the bull trap or the test of ascension, and then it comes back down and you can make some good profits. Ultimately, on this stock, I was looking for a total breakdown of the run. I wanted it to come back down to the VWAP for like a 10-point move, and that would have been if I entered correctly on the short stop or on the bull traps with a good entry and then a second entry that is even heavier and bringing my average or bringing my stop loss down. I was looking at anywhere from 50 to 100% portfolio gain on this trade, but it didn't turn out like that. But at this point, I didn't know if it was a trend break or not. It just kept continuing, and it tried to retest and come back into the channel here, but it failed. And then once it failed here and it came back down, I knew that it was a trend break, and I drew a new trend, and I deleted the old trend, or basically made it small so you can't really see it. So this is the old trend, and this is the new trend. My mistake, though, was I drew off of this high, and this mistake almost cost me a lot of money. I should have drawn this channel up to here, to this previous high. I did not do that, and it ended up kind of almost screwing me. So we come back down here. Again, I'm not going long because the price action is curling over and it's showing weakness. And I ended up I split my orders on this one. I put 9 shares here, and then I put 9 shares here above the channel. Basically I wanted to get filled here light, and if it comes up and it touches my bull trap, then I get filled again, and I get a really good average. The average would be in between the two at 9 shares for a $18 or 18 shares total entry, which still was $1.75 rate of ascension. And I fibbed when I calculated those entries, I fibbed the high and the low, and basically, if we can zoom back without looking, I wanted my stop loss to be above the 161 fib, because usually when you have breakouts, it runs to the 161. So I knew if I set my stop loss up here and it broke out, it would at least pull back, and I could cut out for a small loss, maybe like 5% loss or 4% loss. So that was my exit strategy before I got into the trade. It ended up breaking high, and it way overextended my entry. And at this point, I realized my mistake of earlier, which was drawing my trend channel off of this high instead of the previous highest high. So the actual channel should have been here. And now you can see my mistake. I should have shorted heavy here and another short up here in case it broke out. Then I would have had a fantastic entry with a fantastic stop loss, and this entire channel would have been profit. But instead, I shorted almost between the 50 and the 75. So my profit target was 60% at that, with a 40% loss up here. And I knew it was a mistake at this point. It came back down, and I didn't know whether to take profits. In hindsight, I should have. I was being a little greedy, or at least taking half profits and downsized in case it reversed on me, because I already had a terrible entry. And it ended up holding this trend channel right here, this trend line, and curling up. And at this point, I knew it was going to come back and test. I waited for the test, so I was a little red here. Actually, I think I broke even because my average was in the middle. And it started to create lower highs, and at this point I knew this was like a little triangle going here, and it was going to oscillate between the two. And I was looking for the SAR parabolics to line up with each other. So I was watching the 5-minute SAR parabolics here. So the 5-minute SAR parabolics were on the underside, so they were creating support to hold, and the 2 minutes were on the high end coming down low. So the parabolics were pinching together, and I wanted the 5 minutes to flip and the 2 minutes to stay bearish, so that way it would have shorted the stock all the way down, but that didn't end up happening. As we scroll over, you can see that it broke trend here, and the SAR parabolics, I call them money balls as well. The money balls flipped over and went bullish, and at this point we only had like 15 minutes left to go in the day. I knew it was going to go bullish and finish strong, so I got out. I broke. My first exit was here, and my second exit was here. So my average was right here at this point. So I made a little bit of profit here, and I lost a little bit. So I pretty much broke even on the trade. But overall, I made $15 on RETA, which brought my total wins for the day. I think at 64 plus. Sorry. No, 31, 64 plus 15, 14, $46 divided by 410 was what we stopped with. So I ended the day green, 11% on portfolio, which is still a fantastic day. 10% a day. It's pretty good returns, but they could have been much better. I made some mistakes, but I learned my mistakes, and each day I'm trying to improve this specific strategy. This is the same strategy that I used to short RAD and TRN and CLF last Friday. And if you haven't seen week one's recap, it'll be on my YouTube channel, or there'll be a link in the description. Actually, I'll link it, a button up here that you can click to watch first week's recap. But this is a strategy I'm trying to refine for the short trades, because if we had another hour in the day, this stock probably would have broke down, because it was showing weakness and a loss of momentum. But it just didn't happen. The opening bell closed, and now we can see that it is on the low end of the channel. We'll see it's kind of breaking a little bit, but we'll see what happens tomorrow. It could be a pretty good short trade for tomorrow, but we'll see. So that's the two trades for Monday. All right, so for Tuesday, I made 3 trades today. All 3 were green or red, but they were small losses. Total loss of $18, which I believe we started the day with $450, so a 4% loss on the day. two of the trades, or two of the predictions ended up being correct. I just had not good entries, and there was also a guy in chat today that was kind of hounding me and telling me where to enter and exit and telling me how to trade, and it was really just messing with my trading. Rule number one of trading is you don't listen to other people when you're in a trade and you're in your strategies, but it started to mess with me a little bit, and I was second guessing my trades. But with proper management, let me turn off those alerts real quick. So yeah, I started second guessing my trades, and I ended up managing them for a small loss, but they could have been green. This could have been a green day. So let's go through them. I wasn't seeing a lot of potential in the overall market, so I decided to just range trade and day trade GUSH and HTZ. I traded HTZ for profit yesterday, basically waiting for it to come down on the low channel and bounce and go long. But we had some indecision today and some choppiness. So the stock started out parabolic, and I ended up I set two limit orders down here on the low end of the range to average down. The first one was 90 shares. We got filled within about 6 cents off of the low for 90 shares. We pull up my cheat sheet. 90 shares was about a 40-cent stop loss. So we entered at 87, so the stop loss was way down in the 40s, so you can't even really see it on the chart. It was way down here. So it was a very loose stop loss, and I made it intentional because I figured the stock would come down lower, and I wanted to get in for a lower price, but I wanted to get in just in case that it rebounded. It ended up doing that, and I was up about $12 here, which would have been around 3% portfolio gain, and I should have took profits. I should have saw this as a parabolic and not as a red to green. I ended up throwing the RSI indicator up here, and I think I'm going to use this for the next few days on these parabolic range trades. But I should have saw this, especially price action wise. This huge rundown, double doji gap. This is picture perfect price action reversals and RSI plays. So buy here, sell high on the RSI, and then let it come back down and retest, and you enter again on the low. So this actually was my second entry for a heavier size. I saw that it was starting to triangle, and it was bouncing off of this trend from previous day. So we had this downtrend, and volatility made it spike over, but it pulled back into the channel. So I knew this was turning into a triangle at this point. So I got in here again low for more shares, and I was hoping for it to break the triangle and go long for the day, and I would have made profit, but it ended up breaking down. And it broke below VWAP, and at this point I should have just taken profits and covered, but I was kind of flustered, and I woke up tired, and I had a headache as well. I was not on my A game at all today. So pay attention to how you're feeling when you trade. You really need to be on it, and if you're not feeling it for the day, it's better just to not trade. And I should have taken the hint that today wasn't really my day. And I knew that when I woke up. I woke up with a headache. But anyways, I traded, and it ended up testing VWAP again and failing. And I had two signals here where I should have taken profits because it was failing. It was not breaking this common trend. Multiple times it failed, and we have this gap down below VWAP, and then we have a retest of VWAP, and it fails again. So a double failure on VWAP. I should have took profits here into this big red candlestick, but I didn't. I broke even. For a small loss, and that was my trade on HGZ. Now I wanted to re-enter this. I wanted to see where it was coming down low, and we got this final touch here, and I saw it run back up to VWAP, so I knew this was probably the bottom here of the channel, and I was waiting for the retest, and I actually set a buy order in here to go long, and I missed it by 1 cent, and that irritated me. So it came down and touched and doji and then rebounded. So I missed that at 1 share, and then it came back up, and I don't know what I was chasing the trade at this point, and I bought back in 90 shares, and it broke the VWAP and tested and failed again, and I got stopped out. It was a real loose order again, 40 cents, but I didn't want to lose any money, so I stopped out for I think it was like a less than $1 loss plus commissions. Rebounded, ended up going long, but this is a terrible entry. It was midway in the range. This could have been a profitable trade. My original position here, long up to the VWAP, and then a little bit longer there. But my predictions were correct in the micro frames, but it was not correct in the overall. I was expecting it to curl back up to the 75 channel, and in hindsight, it did run to the 75 on the first leg with this big parabolic move, and I could have made profit and just taken it, but mistakes are mistakes, but I'm learning from them each day. My second trade was GUSH, and this was another channel trade. So I've been watching GUSH for a while on the daily. We've got GUSH likes to channel and range. So we had this big channel here, bullish, and then it broke down and it stopped and reversed, and now it's in this mini channel. And you can see that on the 5-minute. So let's throw up the 30-minute. So we have this big channel and breakdown, and it bounces, and then it holds, and it double touches here, comes back down, and tests again to come back into the channel, and it fails. And at this point, I know this is a bearish channel. I don't really start paying attention to it till today, and it double touched here in the bottom. This would have been a good buy target here for a swing trade. Ended up opening at the 25 channel and running long, and I wanted to short it back into the channel. My prediction was correct on this trade, but again, the guy that was in chat was telling me how to trade and telling me I lost profits, and I should have took profits when I had them, and he was right for some things, but I just wanted to let the trade go out. But at this point, I was getting flustered, and I entered here almost perfectly on the rebound for this long run up. I had a limit order here, and then I had a limit order here to get filled for the rebound. I should have took profits on the rebound at the VWAP, but I didn't, and then it started to come back up, and I got out half here, and then it kept continuing past the channel, and I knew this was going to be a bull trap, but I wanted to cover, so I covered here to wait to see what the price action was. And I did want to reshort this because it was a bull trap. It overextended itself, but I didn't know if it was going to get in a ton of buying pressure and then just run back up into the old channel, or just continue to channel up. So at this point, I was unconfident and unsure of my trade, but my prediction was correct. I should have shorted into this bull trap and then let it run down for the day for profit. Both of these trades could have been green. They were break even, so I had good risk management, but I could have taken profits. And then lastly, I took a trade at the end of the day on BPMY short. So it had new earnings today. I believe it was earnings today. No, it just had a technical pop up to 200. No, actually, it did have good news. It was running on news. So it ran way up and tested VWAP here, and then it came back up, and I shorted it I was hoping for the breakdown back to VWAP. I saw that it was creating a parabolic channel here, and it was ascending wedge, so I was hoping the ascending wedge was enough to run out of steam and then fail and short, but I don't think the angle of this ascending wedge was too weak to have that. So I entered here at this high end of the channel. I could have gotten the bull trap right there and got some more profits, and I was green on this trade down to the previous trend line, but it didn't break down, and it rebounded, and then I was down a little bit here, and it continued, and it came back down, and it tested again, and it didn't break the parabolic SAR parabolics. So I should have known here that I should have got out because it started to doji over. And then we had this big bullish engulfing. As soon as that bullish engulfing candlestick popped right here, this thing, totally eating up this red doji, I knew this was going long at this point, and I wanted to get out. I tried to put a bunch of limit orders down here just to take a little bit of profit, but really that was just greed. and trying to cover my losses for the day, and I ended up not getting filled and had to take a loss for a small, couple dollars, and then it ended up breaking out. So that was a good prediction there on that big bullish engulfing that it was going to go long, and it ended up finishing at high of day. Yeah, that was my trades for today. I shouldn't have even been trading. I was tired and just not really on my A game. So you always pay attention to how you're feeling when you're trading. All right, so for Wednesday, we had a pretty good day. End of the day, I think up $51. We started with 375, so I believe it was just over 13% gain on portfolio today. The trades were real simple. The first one I entered into was GUSH on the open. Let's pull out the 5-minute chart. So, basically playing the range again on GUSH, just like we did on the reverse side short the other day. And I was looking for it to come down and touch, and I had some alerts set, and those alerts started going off. So I actually set 2 limit orders into this. I kind of missed this on the pull up. I could have got a better average here with a heavier share size, but I had just missed it. I ended up getting 29 in at 29 shares, which if we bring over the calculator, also I added another column to the calculator. Version 2.2 is out. Basically, for those that might not have a lot of margin, or you're trading with cash accounts, you basically put in your buy power here and the price of the stock you're trading, and it'll tell you how much all of these shares are going to cost to buy. So that way you can know if you can enter into the trade or not. But anyways, 29 shares was $1 stop loss, and I was risking 12% on this trade, risking $28.50. So my stop loss, or my entry, was 38.6. So my stop loss is way down here. I kept it real loose just in case it broke down. It ended up going parabolic for a little bit, kind of a descending triangle. Let me flip this to today. So we had this descending pattern here. Ended up coming back down and touching, and I could have re-added here, but I already had my average here, and I didn't really want to size in heavier in case it kept coming down. I did put in a entry below this to average down in this area, but it didn't. I missed it by probably 8 cents, so I didn't get filled on that. In retrospect, if I had gotten the fill down here, I could have filled on this leg and still been pretty good. But that's what happens when you get into a trade late. You don't get the good entry and the good average. So ended up ripping back up, touching VWAP, pulling back, and then it ran up and broke parabolic, or saw parabolic, and at this point I knew it was going to run long. And I was watching the RSI for it to come up into the 70s, and I figured it was going to bounce at the 75 of the channel, which was right at the whole dollar of 40. So GUSH tends to move 3/4 of its channel per day. It doesn't typically do full channel moves. If we zoom out here on the 5-minute, this is a half channel move, a 3/4 channel move, a 3/4 channel move, 3/4 channel move. So I wasn't looking for a full movement on this trade. I was happy with the bounce on the 40 and taking my profits. So I sized out half here, and then I tried to get out here, but I missed it, and I had to get out on the downturn of this. And then we had I figured since it was so overextended, this would probably be a good time to reverse my position. And this is actually my first reversal trade so far. And I reversed a short order of 40 shares at $39.94 to play it on the downside. And I got a little impatient and took my profits early. In hindsight, I could have let this thing run down. I took my profits at $39.74, so about a 20 cent gain. Ended up coming all the way down, and it bounced off the 50-cent mark for a second, and it came all the way back and ripped down to the low. So this could have been a really good short trade, but I ended up just taking my profits immediately down. So we made $30 up and $8 down plus commissions. So somewhere around $5. So that was a really good trade, real straightforward, just channel trade. My next trade was actually a missed trade, and it was a stock split today. Or no, it wasn't stock split, it was news. And the stock had ran up quite a bit, 200%. So, usually these stocks, this pattern is a very easy short setup, and you can make a lot of money on them, because if we look at the daily chart, this thing has like no volume here, no resistance. It's a clean chart on the year, so these things are easy shorts. And I missed this thing by 25 cents or 20 cents, something like that. And this trade could have been, well, we made about 8% on the GUSH trade. This trade, if I had sized into it heavier and kept stacking into the short, and I could have kept my stop loss still above the VWAP. So my attempted entry was right here at 28.75, and I think this wick was like 20.61. So we missed it by barely a hair. I'm not too familiar with trading these. I just know that you draw the trend line off of these bounces, and then you try to short into this area. I was looking for it to curl up to VWAP. In retrospect, the SAR parabolics were bearish, so I should have just shorted at the SAR parabolics. If we go to the 1 minute, might be a bit easier to see. Yeah, so just barely missed it, and my stop loss was real loose. It was like a $5 stop loss. We tried to get in with 6 shares. Would have been yeah, somewhere around $5, the very low end of my stop loss. So a super loose stop loss, and that's so that if it does reverse and it breaks through VWAP, I'm not losing a full 10%. I'm only losing like 3% of my portfolio. But as if I'd gotten into this trade, I would have sized into it on each leg, and that way my average would come down. My average would come down a little bit, but my stop loss would come down a lot. And as the stop loss comes down and shrinks, you start making profit every time the stock moves that full amount. So, from here to here, this is about $5. So a $5 move in the reverse. So right here, with this one entry, would have been a 12% gain on portfolio, because I'm risking 12%. If I'd sized into it and brought the average down to like here, which would still be above VWAP, I try to keep the average above VWAP, and my average would probably be somewhere right here, and a stop loss of now $2.50, somewhere around there. So right about here would have been my stop loss, so still way above VWAP. But now, every $2.50 the stock moves, I make 12%. So this full run on the day could have been a 24% gain on this short, if not more if I stacked into it effectively. But I didn't, because I missed my entry. So that was an attempted trade, but I just barely missed it. And then my last trade was RETA. So RETA is on its second day range of this huge run up. We had the stock move like 25 points or something on news, and it's now kind of channeling on a consolidation, and I wanted to play the consolidation. So this is a real simple. The blue line is the high of yesterday, and the low line is the low of yesterday. So, when you're low, you buy long. When you're high, you short down. So, short sellers got into here. They took the profits down here. Long traders get in down here and take the profits up here. So, it was kind of a rushed entry. I hadn't drawn this trend line yet off the pre-market highs. In retrospect, I probably could have stayed in this, but I got out with a small profit because I didn't like the immediate price action on the 1 minute, and I didn't have a great entry either. So, we had this pop up in VWAP, and it pulled back to VWAP, and this is where I wanted to get in. VWAP bounce, the VWAP test. So I got in light 7 shares, which was actually this range is this entire stock's range is a $11 range from high and low of yesterday. So we got plenty of movement. I entered at 76.55. A 7 shares would have been $4 stop loss. So my stop loss would have been, so this would have been my stop loss way down here below low of the day, or low of pre-market and the low of yesterday. So I got into it wanting it to curl up and go long for the day, but as it continued on this price action, I started seeing a lot of inconsistency. I saw multiple dojis here, and the stock not pushing above previous highs. And I figured this was probably building into some weakness and it was going to reverse soon. So I ended up getting out right here on this doji at $37.94 for like a $9 gain, minus the $3 for commission, so $6, real small gain. Again, this is the downside of trading with a small account, is you have to go heavy and hard and risk a lot to make profit, but if the runners don't run, you're getting a small gain with commissions eating up a third of it in this case. But my prediction was correct. It ended up breaking down and pulling back, and this was a second test on VWAP and it failed. And so this could have been a better entry if you wanted to get into it long, but at this point I was just done. I was already up 13% on the day for portfolio, so I was happy with my gains. And it just it did end up running long, but the better entry would have been down here close to the star parabolic bounce, with a real loose stop loss, so that if it breaks down, you get out and you can resize in down here. But overall, pretty easy trades, pretty straightforward. I really wish I had gotten into that torque short trade. This would have been a fantastic trade for the day. All right, so I'm going to do Thursday and Friday together because it is currently Sunday at 9:50 at night, and I still have yet to get this video edited and uploaded. So I'm going to kind of rush through this these last 2 days. They were terrible days. Had 2 very big red days and a lot of mistakes that happened. So we'll just get through them real quick. CLF, I was shorting CLF thinking it was going to break down from its run up previously, since it was so overextended on the daily. We had this big run up and then curled over and started to pull, and I shorted it into here thinking that it was going to come down and just short for the day, but it ended up not doing that at all, and I ended up getting stopped out here. I way overtraded. You can see how many buy and sells I had here, like 6 or 7 of them. I way overtraded this and fought the trade the whole time. I really don't even know what I was thinking. I was just fighting it, and this was a really bad start to the morning. I think my first entry was 9:33. I need to make a rule where I just do not trade before 9:45, because you really need to let the market volatility die down and see which way the trend is going to be going for the day. This was way too early to predict what was happening, and I was just again impatience. Impatience has been my biggest issue, and it's costing me a lot of money. My next trade was GUSH, and I actually made some profit on this one. Up $24 on the trade. I did kind of overtrade it a little bit. We got 6 buy and sells here. So I went ahead and saw that it was spiking in the early morning, and I shorted it on this bull trap here, and let it come back down and made some good profit on there. My first entry was at 9:37, so that was like right into this long right here. I shorted it and it came back down and made some decent profit. So that was a good trade, another range trade on GUSH. I seem to have pretty decent accuracy on the channel trades so far. HTZ was my next one, and this was at 10.10. It was for a break-even trade, and what I did was I think I just got stopped out. I went too heavy too early into this trade. The 10.10 mark was right. Yeah, so I went in. I just got in too early again, and being impatient. I think I was trying to short this. No. Yeah, I just got into it too early and ended up breaking even. XLNX was my next trade. The first entry was at 10.37, and I was looking to go long on this. It was a bounce off of VWAP. It's kind of hard to see, but the VWAP is that faint white line right here. So it ran up, hit the top of the channel, curled back down, and touched VWAP. I was looking for the bounce, and this trade actually ended up going the right way, and I could have made some decent profit on this. I had a pretty tight stop loss down here, but it was just so slow, and I was kind of getting shaken out, so I Just got out of it for like a small, I can't remember if it was a loss or a, yeah, it was a small loss, but my prediction ended up being correct. It did actually go long. My entry was in here. I was just early in my entry and impatient and getting scared out. You know, my better entry would have been down here to limit order and just let it run. So again, impatience cost me money. Total of minus $13 after commissions. So Friday was interesting. My first trade on Friday was Amazon on earnings. Amazon beat their earnings, and I think they even doubled their revenue. I can't remember exactly what the numbers were on it, but it had really good earnings, and it was gapped up, and I was looking for it to pull back and get into the pullback and go long. But what I did not anticipate and what I did not check was the overall market, the S&P 500, and you know, when you're trading these mega caps and large caps, they are very weighted, and they will react with each other. And if the overall market is extended, it's much harder for those stocks to go long. It's much easier for one individual stock to go long when the market is underextended. But in this case today, Friday, I did not check the S&P 500, and we can see the massive move here on the S&P 500. Let me zoom out to the 20-day 10-minute. So we have this common channel on the S&P 500. You know, it is uptrending. It's always going to uptrend. But we had this huge overextension Thursday, and this kind of went parabolic and ranged for the day, and then it opened, and you know, this is a bull trap here. So this is a one-day bull trap, and then you know, the shorts get into it, and it just pushes up straight down. I didn't check this at all. I didn't look at it. You know, that's a very rookie mistake when you're trading mega caps, and this is a stock that I'm not familiar with trading these large caps like this. I really should not have even been in this trade or even taken it. You know, my biggest issue is I think I need to stop trying to trade everything, which is a very common rookie mistake, is trying to do all the different patterns, and just stick to the one patterns that I know and that work well for me. And so far that is the channel trades like GUSH and HTZ of this week, and I'm also have decent accuracy on shorting into resistance on some of the lower float stocks. But those are my two profitable patterns, and I need to stop trying to trade all these other patterns. So this was my entries and exits on Amazon. You know, again, I entered right at 9:34, way too early in the market open, especially on a mega cap, one of the biggest companies in the world. Even on earnings, that's too early. And if it's going to run, it's going to run for the day because it's Amazon. So if we go over to Amazon, you know, I had a huge gap up on earnings, and it was pulling back, and I wanted to get in on the low end of this channel. What I did was I drew a trend line from here to here, and then I brought it back down to the first resistance, and I figured this was the bottom of the channel. It was going to bounce and curl and go long for the day because it had really good earnings, but that's not what happened, obviously, because I didn't pay attention to the S&P 500, and the S&P, even though it had good earnings, it just got pulled down and went short for the day, and I ended up taking a pretty heavy loss on that one. I think I entered and exited it twice or three times even, trying to fight the trade. So I got into it down here thinking that maybe this is the bottom and it's going to reverse. But, you know, fighting the trend, counter trend trading, getting an early entry, trading a pattern that I don't know and I'm not very familiar with, you know, just all rookie mistakes. And, you know, I could have done better on Friday and Thursday, just managing myself. So after that big loss, my next one was AWX, and this was also a $42 loss after commissions. This was a 12% loss. Amazon was like a 15% loss on portfolio. AWX, my prediction was actually correct on AWX. I saw that it was very run up over this channel, and it had a multi-day channel going here, and I was shorting into the bull trap, predicting it to pull back and go down, and my prediction was correct. The bull trap did fail and go down, but I got into it way too early in here, and I should have just been more patient. I should have had a much looser stop loss, and I should have waited. Oh, my other mistake was I believe I did not. Yeah, when I drew my channel, I drew it again from here to here instead of up to that pre-market point right here. So I was drawing it from this point and this point. So same mistake that I made on Wednesday or Tuesday. I can't remember which stock that was, but I did the same mistake. I need to always check my channels. So I was shorting up here, and I was way too heavy. I shorted into it multiple times before it ever gave me confirmation on a trend reversal. So, you know, none of this price action here is showing reversal signs, and I had a super tight stop loss. I went into this way too heavy for my initial entries. My first entry was 10.28, then 35, and then 35. You know, way too quick to let the pattern play out. I should have waited. This solid red candlestick would have been a perfect point to get heavy into the trade. You know, I could have had a better average actually if I had just let it run on my first entry of 30 shares and kept my stop loss rolled loose, and then waited for the confirmation and then shorted heavy here, and that would have been a fantastic trade, and I would have made this breakdown was on 90 shares, $1.80 or so. Let's pull up my calculator. So on 90 shares is about a 37-cent stop loss. You know, take $1.80 divided by 37 cents. This could have been a 3 to 4 to 1 trade here, and I could have made very, very good money. I could have made over $100 on this trade and recovered the majority of the losses I had Thursday. But again, impatience, not letting the trade play out, and showing signs of weakness. I could have made much more money on this trade, unfortunately, but I didn't. And then an interesting note, the stock ended up going long for the day, and it ripped up through all of this. And this, I later learned that this buying is actually the owner of SureTrader. They ended up filing a Form 4, and he bought the entire float that was left on AWX. So he bought all 1.9 million shares that are in the market right now, and caused a huge short squeeze. So Monday is going to be very interesting day on AWX. My next trade was GUSH, another channel trade. You know, I've had good success with GUSH, so at this point I should have quit. You know, this is pretty much overtrading at this point, but I had confidence that in GUSH that, you know, I've traded it successfully all week, and HTZ. Well, HTZ one day I didn't, but it was a break-even day. So I got into GUSH a little later at 8:06. Yeah, right into here on the low end of this channel. I waited for the bull trap, or the short trap, and got into it here and rode up, and I was making profit, and I was up. But again, my mistake was not checking the S&P 500, and GUSH is a oil and gas ETF. It got pulled down with the rest of the market, just like everything else. So, you know, it did start its pattern in reversal to go here, but it just didn't hold up, and I ended up taking a loss on GUSH as well because the overall market started pulling it back. So my last trade was NTNX, and this is not a stock that I'm typically trading, and I shouldn't have even been into it. This was a revenge trade at this point, over trading definitely. Took the trade at 12.20. Again, trying to predict a bounce and get into it for the reversal to go long on this channel, but the channel was actually drawn kind of choppy. When I initially drew it, I think it was kind of hard to predict where it was. I think my initial channel was actually on this trend line, so I had a channel going this way, and it was a much different rate. I got into it right here on this low bounce, thinking that it was going to bounce and reverse and go back into the channel, but it didn't. It broke down, and then eventually bounced here on this actual channel from these 2 points and these 2 points. So that was the actual low, bounce, and rebound. But I shouldn't even been trading it, really. At this point, you know, I should have been stopping, and obviously that was a shot for the day, and there was no way. You know, you don't keep trading when you're losing money. If anything, you've stopped for a day or two, and then or paper trade. So the past 2 days were really rough. I was up $410, almost back to break even. I think it was up to $425 maybe, but now I'm down to like $250 or something like that. So at this point, I'm gonna have to risk so much on my portfolio that each trade is gonna be like 15% of my portfolio, and I have like 7 trades left before the account blows up. So this week is going to be very rough, and it's going to be a test of proper management, only taking perfect trades, and I need to stop counter trend trading. I need to stop trading early in the morning. I need to wait for the opening bell volatility to die down and show which way the trend's going to be going. Trade with the trend, pay attention to the S&P 500 and the overall market to see what's going to happen. Don't trade patterns that I'm not going to be familiar with or that I don't usually trade. I should not have even taken the Amazon trade. That was a call out actually in my chat, and I wanted to play a earnings, but it just wasn't a pattern. I'm not familiar with earnings plays. I'm not very good at earnings plays at all. In fact, that was actually my first earnings call. Oh, and I also got stopped out of my HTZ swing trade because it got pulled down as well with the overall market. So my swing trade on Robinhood ended up getting pulled down. So I'm predicting that this probably isn't going to pull back up at this point to the 50. I had to break out of it at $13.95, and I actually made like a 10-cent profit on the trade, but it was a very small sizing. So tiny little profit on the Robinhood trade, but that was it. So that was my week. Yeah, this next week's gonna be rough. I will see you guys in the next video.